that. All right, cool. Let's see. So we got that opening here, and it's just a drop down. So we had that push up. So let's go into two charts. 15. That at 15. So I know that's a 4-hour range there. Got you. Okay. So let's see here. So we're above Asian range high. That's one thing for sure. Asian range low is sitting right there. So like I told you guys, when it comes to the market and marking up, I don't want too many things on my charts. I want to entice my trading. Even this almost is too much because I'm using 4-hour ranges. So what I would do, just for me, everybody's not the same. I would have it to where I can only see it 15 minutes and above. Because if I have these two charts right next to each other, then I'm gonna see it regardless. Up here, boom. Because when I'm looking at the 5-minute, I just want to focus on 5-minute price action. I don't want nothing to entice my trading, because by the time I go to a 5-minute, I should already have a bias of what I'm looking for. In this case, I kind of already do when it comes to looking for a sell model if presented. So just seeing, where's there one here that just happened? Let's see. That high there. Swept. Got this inversion here. So you could kind of say this one here. And the only reason I say this one, you can kind of say this one, is because we had that gap. So you include that gap, it touched it with a 20-point risk, and now it's going for these lows. So that's 40 points. So this is the 1-2 right here off this sell model, off 3-minute. If I zoom in, you can see it right there. It tapped into it and then dropped to the downside. And that drop right now is at 52 points. This happened right at 9:30. Yeah, so I didn't get to the chart right until 9:30. So that's one opportunity. You can keep that marked up for right now. See if it comes back, because it can come back, sweep that high. And let's say I see a trade or opportunity to where it has a confirmation and it already touched it, and I'm seeing that it can possibly come back. When it comes sweeps it, I don't jump right directly in like I usually do. When it comes to, like, let's say if it's freshly made, if it touched it and it comes back into it and sweeping this high, and we'll see how far it's going to sweep the high. Is it going to run up higher, or is it going to run, sweep it, and then fall to the downside? And sometimes you can miss out on an opportunity because it'll sweep it real fast and then drop to the downside. But I'm okay with that, because you got to remember, we just took out these lows. So if it wants to go for this high, it will. Okay, so focus on current market structure. We at 23, 110. 123, 125 is here inside of this confirmation. So the high I was talking about is right here. I doesn't want to sweep this high. There's that sweep. So watching how this sweep happens. For me, I wouldn't get right in because it's already here once, but this is an opportunity. But look at it here off the 4 hour. So you also got to be aware of that. Here. And I'm just simply using this as confluence. I'm not using it as end all be all. You gotta look at price action, see what price action is saying. Well, we look on the 15-minute, we see we have this inversion here off this sweep. So we look right here, there, you got an inversion here, and then this can be your confirmation that this closes. You got 2 minutes till that closes. But also it's, so if it sweeps this high and price wants to confirm, use this as confirmation, we could possibly go for this low target and Asian range low if price wants to go down. One minute left. And then look, see how you have another one right here. And where does that sit at inside of this? This price is $23,136. So 23,136 is the close of this imbalance. Hey, did it tap it? I think it just tapped it. Yep. Remember, we took out that low. We swept this low. Well, this low. Here, these equal lows. So price can very much go for this high here, 1 and 2. But you have a 15 and a 3 minute giving you the sell model. but you also have that imbalance above it. So remember, your initial stop loss is not your stop loss. That's your initial stop loss. That's where it has to be. That's where it has to be bare minimum. Maybe in like 10 minutes, I had to run and get my daughter dressed, so I'll be gone from the screen for like 5-10 minutes, so you guys can watch it. Letting price play out. There's that push up towards the initial stop loss. Hey, well, that's doing that break. Okay, here's that push up. Makes sense. Makes a sense. Why does it make sense? It's because you still have this 4 hour in play. Right? So see how the 4 hour broke this confirmation and then went up going towards the initial stop loss? It's doing the same thing. Same thing. There you go for that high. Oh no. What's this? 23, 158.50. 23, 158.50. Yep. So now it made equal highs. It didn't make new highs. Let's see how this 15-minute closes. That's what I'm watching right now. So my focus right now is 15 minutes. Let's go 15. And now we know where we at. 4 hours, turn it off. Let's focus on where we at right now. You also have this one too, here and here. So for that initial stop loss, that one is here. Yeah. So now, when you have a model that doesn't work, what do? Do you leave it here, or do you wait for it to play out? Well, with this one right now, I want to see how this candle closes. If this candle closes above the initial stop loss, then I'll scrap it. And then you wait. That's why you're not eager to take anything as soon as you see it. You wait, you mark it up. It starts to play out. Like I was telling you earlier, when you had that 3 minute, it tapped into it, but just because it tapped into it before, and it pushed down and gave 52 points. But then the second time when it came back up, it's like, okay, this can continue running. So you don't just take anything just because you see it. You got to see the right opportunities. But just because you mark up a model and you say, well, it's supposed to play out. No, it's not. That's not how the model works. Because the model is everywhere. You can find it here, you can find it here, you can find a buy model here, buy model over here, sell model over here. Like it's everywhere. So it's based on perspective and what you're seeing. So I'm going off the fact that we had that 4 hour that broke above the the confirmation and we're headed towards the initial stop loss. And then the 3 minute and 15 minute are mimicking the same thing the 4 hours did. And then the 3 minute had a touch, pushed down, gave you a 1 or 2, and then went right back up towards that swing high that it made at the confirmation. So it's just a waiting game. That's all it is. Are you gonna know all the ones you want to get in as soon as it touches? No. And can you take every time it touches one? You take it. Yeah, that's perfectly fine as long as the risk is feasible. Because after 10 trades, majority of those are going to play out based on your directional bias and what you've seen. That's where you do the dirty work at. So let's see how this 15-minute closes. What I would love to see is a huge rejection and then the body closes below the initial stop loss, like it was trying to do just a second ago. But it looks like it's going to close above it. Let's see. And if it closes above it, I'm going to scrap it and look for a new opportunity. Boom. Scrap. Just like that. Scrap. New opportunity. Now, could that opportunity be the same one? Yeah, but now what I'm doing is me taking it off the screen is allowing myself to see new opportunities. If I keep it on the screen, I'm not allowing myself to see new opportunities. I'm trying to focus on the old one. Let's go 1 hour. Yeah, we're still bullish off of this move here. So that's like a counter trend trade. But you have a 4 hour telling you a sell model. But it also broke the confirmation. Let's mark up this consolidation right here. So we're technically in right now. This 1 hour. Now with that, this consolidation is cool because you're looking at it from the fact that it's all you're looking at an area in which something that can happen at. So when it comes to consolidation, I don't mind that being on my chart. But if you have a model on your chart and it's not working out, take it off your chart and restart. But also know why you're taking that model. So that's not nothing I'm saying like, okay, here's a model, 3 minutes, 15 minutes lining up. So if it comes back up into it, take it. So that initial tap at 9:30 was perfect. It tapped it, went straight down. But then it tapped it and then it went into it, taking up that swing high. But just continue taking out swing highs, like this high here. And then we're going for this high right here. Let's look at that price. 23,173. And 23,125 is here. So the next point for me when it comes to this price would be this. So basically right now I'm between this, and this when it comes to points. This is one between these two levels, well, 3 levels. 23,000 even, 23,125, and 23,250. And seeing how price can play out in these levels. But these are psychological levels, so these are numbers I see on the chart. I don't have to have on the chart. I'm knowing they're already there, so I don't need to see them. But that's what I'm paying attention to as well. As a confluence. Making simple mistakes like contracts out. I want to take a week off. Okay, yeah. If you feel like you're making silly mistakes, yeah, just paper trade. Don't even overdo it. So, what happened? You did 2 contracts at one or something? You took a trade today? Okay, so you try to take the sell? Yeah, don't. We're not doing no desperate plays for sure. That's why I even just the sell now. Like that sell was not a for sure thing, just because of how the market was setting up, and we're still bullish, and we're coming off this 4 hour consolidation. Just how it looked, like the beginning, that 3 minute sell was cool, but when it came back up into it, the 15 minute made one and the 3 minute made one. Now, of course, if the risk is cool, by any means, you take the trade. Trade is a lesson. You walk away with the lesson, and then you're done. Now, the way it was playing out, especially in the 3 minute, when I seen it, how it just ran right back up into it that fast, like it didn't like kind of just go up into it, then hit it. It ran right up into it, and then it just continued running up. So just like that, little signatures and price like that will show you like what price is trying to tell you. It's just the hardest part is just waiting for the right ones. And like for me, even for me, like teaching you guys, like I'd be like, okay, dang, is this the right one? Is this the right one? But all I can do is come to the market every day and mark up as I do, and show you guys opportunities or show you what I'm seeing in the market and go from there. Like those are going to happen. It's inevitable. It's just, like you said, you don't want to go on tilt, or you don't want to do desperate plays. There's no point to. Let's see. Y'all for this. Hmm. Yeah, and you not having a win on the funded is not. There's nothing wrong with that. As long as you have proper risk management, like I say, think about it in 10 trades. Think about it from the 10 trade perspective. Like you can have 7 losses and 3 wins as long as the risk to reward is cool. You'll still be profitable, or you'll come out at least over break even. So I wouldn't focus on the fact that you haven't had a win now, because that's what makes you make desperate plays. That's when you start thinking and like, okay, I got it. Something got to win. Like it really don't. It's really just how the market plays out and when opportunities come to you. So don't overthink it. Definitely don't overthink it. Yeah, just wait. Like I hate waiting. to be to be honest, Like I would love to go to a 1 minute and just be buying here, selling here, buying here, selling here. That's what I used to do. And is it profitable? Yeah, until a certain point, and then you go on tilt, don't even realize it. So like, just waiting for opportunities to come to you, and I want to have streams to where we going down to 1 minute, just so I can do the educational side of it, so you guys can see how even in a fast-paced market like a 1 minute, you can still navigate through it. But for the most part, what I'm trying to teach right now is just the patience part. That's the biggest thing, because if I go in 1 minute and showing you, you can get in here, you can get in there, you're gonna be going crazy. But for what reason? So yeah, just go finalize my journal. Yes, journal. That's a big thing. Paper trade for it don't have to even be a week. Honestly, it could be a couple of days, just to reassure yourself that you're seeing what you're seeing. That's the biggest thing to it. Because think about it, the model's gonna be the model, the setup gonna be the setup, direction's gonna be the direction. All that is cool, fine and dandy. But now you just equate it to risk. Okay, like I'm at a certain amount. How much do I want to risk? Is this risk suitable for me? Even though it looks like good risk, is this the risk that I want to take? If it's not, then you pass it, let it go. Like all those things come into play. So that's what I'm trying to teach on the live. Is that perspective, of waiting for the right opportunities, even if it feels like all day or all week. So I don't want to entice you guys to be taking something every 15 seconds or every 1 minute or every 3 minutes. Like that's not um it's not gonna get you nowhere. And I'm talking from experience. Like you can have one big trade that takes you a whole week, and then you got a bunch of these losses, and then they look like losses until you have a big win, and it takes away all of that. And now you're like, oh dang, I forgot about the loss almost. It's like no, that's why, like you said, journal. The journal is the most important thing. Like I got that Norton journal thing. It's just so complicated. I don't know why they make it so complicated. I just want to have a template for you guys to map out like that. The way I did the Norton thing was perfect. Might have. Do you still use that, Zach, or no? You probably don't. I haven't used it in a minute. I haven't even opened it in a minute because it's being confusing trying to like make separate journals instead of having them all on one. That was a good one. I just got to figure out a way to separate it. Okay, yeah, I kind of figured. Because it's like you can't. If I share it to one person and then share it to another person, it doesn't like separate them. It like groups it as one. I don't know why it does that. And I looked at videos and stuff about it. Still couldn't find nothing on it. So I could probably do some more research on it. But I do want a hard copy journal too. I might do that. I might do that. See if I could take those. Go to like what if I can get a hard copy of it? I'm gonna look into that. Trying to get a hard copy of the journal. Because they have the model, time frame. Yeah. I'm gonna do that today. Put it in my notes. Whiteboard. 1 second. Yeah, we're gonna figure it out. All right, let's look at this. So see how we in this consolidation now? Price is sitting inside of here. So if it really wanted to just run out, why it didn't do it yet? So now you're asking yourself why it's not doing certain things. You start asking the right questions, and then price start giving you the right answers. So look at 5 minute. So what if it even flip? I see this right here. For sure. Let this play out. So we got this. So we took out that high inside that consolidation. Now we're trying to see how price is going to react to that consolidation. One second. Okay, y'all, I got some food waiting for me real fast, so I'm gonna let this play out, let it play, and I'll be right back and go eat real fast. Give me like 10 minutes. back. What do we have? Okay. So we have an inversion in the 5-minute. No confirmation. We have a bounce off of a 15-minute floor. Nope. Nothing there. Could you go to a lower time frame and find something? Sure. You always can find something. But it's what you find, what you need. A lot of times, no. Look at this buy model right here. So much risk though. Almost 50 points. See how you can find buy and sell models anywhere? They're everywhere. That's not the focus. The focus shouldn't be you finding a model. The focus should you be, or the focus should be you getting in sync, finding out which direction you're trying to go, looking at highs and lows, and knowing your direction of bias. That's the main thing. The model's going to be there majority of the time. Let me take a quick peek at gold. Yeah. Okay. Platinum. Disgusting. Nah. That should be least of your worries. If your first trade was good, you should be done for today. You shouldn't even be. You should be walking away. You should be done. Because if you are sitting here to feel like you're missing out, you're not missing out on anything. I'm literally sitting here waiting. Like for me, if I was at live, I wasn't teaching you guys, I would look, I would see nothing, I'll walk away. I'll set an alert, to let me know if price goes take a higher or low, and then from there I'll come back. But the more you sit there and you entice yourself to take something, you're gonna do it. That's why I'm showing you guys. Like, we could sit here and I'm gonna show you. Oh, I see this. Oh, I see that. I'm not jumping into anything. You'll hear the confidence when I'm willing to take something. Excuse me. You hear the confidence when I'm willing to take something. When I'm not. It's two totally different perspectives on how I speak about the trade, and that comes from knowing the direction of bias, and also risk. Those two things are what give confidence because they're confluences as well. Yeah, all those things play a part, man. Yeah, we just in this consolidation, 1 hour consolidation. All that back and forth, and we came right back up into it, pushed out of it, and then came right back up into it, and now we're going back above it. Now, let's see. Let me show you if there were any opportunities inside of this range. If we went to 1 minute. Well, that to push out of it, this low of the consolidation is a key level. This inversion here, price goes above it here, boom, boom. So does this touch it? No. So you have confirmation here, but it touches it yet. Price pushes up, takes off this high, inversion here. Price pushes down, goes below it here, makes confirmation. Price goes into it. Initial stop loss is here. 8 points. Target the low here. That is 16 points. So 1 or 2. Price extends, keeps going down, and then bottoms out, turns around, and push back up. So out of all of this, one here, that sell model here to this low, because you had to have something to aim for. So in this case, would have been this low because this is a recent low. You wouldn't aim for this low here. That's far-fetched. So you don't want to jump to conclusion on stuff. Telling you, the way this market is right now, it's slow. It's not really giving a lot of things. This is the market that we're in. This market can change next week and be a totally different market. But you get so caught up in it's not doing this, it's not doing that because of the market you're in right now, not realizing that it always changes or conditions change, and you don't realize that, and then you get caught up in just chasing. You don't need to. Like, you want everything to come to you, and then there's gonna be weeks where it doesn't come to you at all, There's gonna be weeks where it comes to you once, twice, or depending on where your mentality is, once, twice a week. You maybe get out of 5 days, you'll probably get 3 bad ones, 2 good ones, 3 good ones, 2 bad ones. Like, look at that ratio if you're taking one trade a day, and then you'll have a week where you hit 5 in a row, and just like that. And even with that, if I have a couple of winning days, I'm not hitting the ground running even more. That's where you really want to take a break, because you want to cool off. You have 5 winning days, 6 winning days. Okay, let me take a little break. That's why Wednesday, I'm like, let me take a break. You gotta have that. So, it's gonna be probably 1 or 2 days that we don't go live. I just do the chart. I'm thinking either Wednesdays or Fridays. I think it might be Fridays, but I'm not sure. I don't know yet. So that's what I'm thinking about right now. But I'm not over exuding anything. Like, this is what I'm trying to teach you guys about the patience part, is having that. Like Zach was just saying just a minute ago. Like, it took a loss on his funded so far, and he feels like he's over it. He's overdoing things, or just looking for stuff like desperate plays. You don't want to do that, because you have to know the market you're in. If you always looking for the exact same market from January to December, good luck. So in these type of markets where it's slow pace, it's not really moving as much, you get opportunity here and there, you're not chasing anything. You're just waiting for stuff to come to you. That's why this live is 2 hours. We'll be off for the next 30 minutes, because I don't want to sit here and entice you to take something because you feel like we've been on here. Let's say you're on the live 4 hours. It's like, man, we've been on here 4 hours, we took nothing. Yeah, it's going to be like that, because if I wasn't live right now, I would look at this market, I would see what it's doing right now. It looks kind of nasty. It doesn't look like a clear opportunity for me as of yet. I walk away. But that's why I also have different pairs that I trade. But you have to get good at one pair first. If you're not good at one pair first, you take that bad habit and put it somewhere else, you're going to transfer that bad habit. It's not going to make you better, because you can trade more pairs now. No. Like, if you look right here, I got all these pairs here. Here. These are my micro minis, and these are my micros. Same exact pairs. But I go through, I scan them, I look at the 4 hour, I scan 4 hour, and I see which ones I favor on the 4 hour. Not even the daily. Like, this is NAS. We have consolidation off the 4 hour, and then we finally pushed up, targeting this high. This is gold. Gold was giving me a sell model to the downside. So this sell on this drop on gold, I caught yesterday with a student. On the push down, just showing them how I look at different pairs. Same exact thing. I'm not changing anything up. This is US 30. This is a buy model here. If it wants to come down to here, you see this alarm right here. Then you have the oil. Oil has an inversion, but I don't have a confirmation yet, so I have to wait. Then you have Russell 2000. This has an inversion and confirmation. We already tapped it. Price already pushed up. This is already running. Then I have gas. I haven't marked up gas yet because we don't have anything. I had to look farther to the left, so I haven't traded or looked at gas as of yet. And then I have platinum. Platinum was an inversion, but look how far the confirmation is. So there's a lot of room for error before price wants to push down, if it does, because we still have this floor right here. So I'm doing the same thing for all the pairs. I'm not changing anything up. It's the same analysis. I'm just favoring which one has a better opportunity. So with NAS, you may have to sit here for 1 or 2 days to get the best opportunity. So for me, I look at 3 different pairs, primarily 3 different pairs that do all the same thing, but correlate different. So for me, it'll be NQ, gold, and oil. For me, those 3 do 3 different things. They're not going to be moving the same. So if I can see a buy on NAS, then I'm probably seeing sales on gold. Now, is that always the case? No. But what I'm doing is I'm giving myself 3 different symbols to look at. That way, I'm not enticed to take something on NQ all the time. But you have to get good with NQ first. Because if I tell you trade all these pairs, I'm not telling you the way that I did it. The way that I did it was I traded NQ or YM for 3 years. three and a half years before I even added anything else. And I was going back and forth between YM and NQ. So this is the pair I started trading first. This is US 30. This is my baby. Like, this is what I started trading at first. And I love the pair. Like, it moves good, but when it get wicky, it will stop you out for a whole lot of points, and it has no grace. So NAS is a lot slower. In the coming years, it's been a lot faster. Especially now, NAS is not the way how NAS is now. It was not like that a couple years ago. Like I was telling some of my students, NAS, if you were getting a 125 point move for the day, like imagine that for the entire day, 125 points. We can get that going one way. So that's how NAS used to be. It used to be super slow. And then ES is like the sister of that. So it moves 10 times slower. It's the same as that pair, but NQ and ES, they correlate. So if ES makes a higher high, NQ should be making a higher high. So I don't trade ES because I trade NQ. And then you just have all these pairs. So now I can trade ES if I wanted to because it's the same exact thing. Like, look, I can show you. If I go here, look, that consolidation here, right? It's the 30th. Yeah, the 30th on the Monday. 30th on the Monday is here. Consolidation as well. See that? And if I go, let's just mark up this consolidation here. It's the same exact thing. Just a little bit different in price. But ES is 500 companies. NASDAQ is the top 100 tech companies. And then you have Russ 2000, which is 2,000 companies, small cap companies. And then you have gold, which moves off barrels for the oil. And then you have gold, which move off ounces. And then you got gas, platinum. I don't trade Bitcoin. I just look at it. Yeah, that's pretty much it. Just keeping it simple, man. Because I had a student yesterday who was talking about it, and then they was asking me, why do I trade so many pairs? And I'm like, I showed them how many pairs I trade, and they like, so you trade all those? I'm like, yeah, sometimes. And they was like, so like every day you look at them? I'm like, no, like I'll mark it up on a 4 hour, set an alarm. If it gets somewhere that I like, then I'll look at it. Other than that, I'm focused on NQ. And that's the main thing when it comes to this and teaching you guys. Just keep it simple. Like, if it ain't there, it ain't there. Why overcomplicate it? Think about it like this. If you have a trade, let's just go from a funded mindset, so everybody can be on the same playing field. If you have a trade that you want to risk $500 on, and you seen it on a Monday, and I told you that you had a better opportunity on a Wednesday, but you seen the opportunity on a Monday, would you wait till Wednesday for the opportunity? You probably wouldn't. You probably take Monday, see how it plays out, and then Wednesday comes and the opportunity plays. Like, man, I missed it. Now you're getting in again with 500 that you don't have, and like down double the amount because you try to see it play out. Well, with me, I already have the mindset that Mondays I'm coming into with I don't know, my mindset, even if it's a good opportunity, because I want to wait for the momentum on the higher time frame, which will be just overall to get me in line or in sync with price. Now, if I'm in sync by Monday, cool. But for the most part, you want to let Monday get you in sync. And that's just a rule I set for myself. Now, does that have to be for you? No, you could look at Mondays as a fresh day, whatever. I look for my trade. If it's there, cool. But Mondays, I go into it with a whole different mindset. Mondays or Fridays. That's why I said yesterday, Wednesday, I took the day off. Because you got to have that window where you're just not on it. You look at it, but you're not on it. And that can play big on your mindset. Okay. So right now, we are between this 4 hour consolidation and this 1 hour. We got 10 minutes till this candle closes. Let's see if it closes inside of the consolidation or outside of it. If the body of this hour closes above that previous swing high, confirmation, and then we want to go higher, right? So this one right here, you got this one. So the first one, well, I'll say the second one or the first one. Which one you talking about? Or you talking about the third one here? 9 a.m. to 2 a.m. hourly candles. 9 a.m. 9 a.m. to 2 a.m. 9 a.m. yesterday. Oh, okay. Yeah. So in this case, I want to see how it goes above there. That's just 2 p.m. If it closes higher than this one, then I'm looking at it as it bounced off of the consolidation to probably go take out that 9 a.m. candle, or this high right here, because we're all-time highs. So I only can use what we have to the left of us right now. We're already going back to the all-time highs. So in this case, what I would do, like I was just telling them, is, let's see, 15. We got this push up here. Got this back forth, back forth, back forth. So if I had to look for something and like try to get as much information as I can when it came to just what's happening right now, I would look and see, okay, we had this consolidation back and forth. Then me just looking at this price action here. I see this long wick here. I see that we came to that here. So price broke below it. Then we stayed below it the entire time. Let's see, did it go back above it? Yep. Okay. So we broke back above that. And the only reason I'm using this wick, this long wick, is because this wick was dealing with this consolidation here. We had this long wick out, and then it pulled back, and then price went above it. So this midpoint for this wick was just showing me signs that price either wanted to stay down or go above. Because at that time, this consolidation would have been the same exact thing. So imagine you had this consolidation here, and you just had this wick here, this long wick, and then you're thinking price is gonna push to the downside, and it doesn't. It closes above this midpoint, and then it continues up, and then it drops back down because it still had that higher area. So even though that's not a swing high, it's still part of this wick and this range. And then price just stayed inside of there, consolidated, broke out, came back into this consolidation, and then dropped off. So you can look at this back and forth as consolidation, like a smaller consolidation. But that's you looking at it from a microscopic lens of what transpired inside of this area. And that can help you figure out what can happen later on. So are we coming back to this consolidation pretty much here? So if I went here and I went extend right, and I go here, that's where we at. So you'll see how price reacts inside of here. So a lot of times we focus only on the swing high, but think about it. How was a swing high made? If you, that right there in its own is a big thing. Look at how the swing high is made. Sometimes you'll have it to where the swing high is the middle candle, and then the candle to the left of it, the body is probably not higher than it, but the wick is. And then you take that candle to the left and you drag it over, and you see it wicked out, but then the body is still inside of that range, and then it pushed down. So that's showing you signs of rejection. Why did it reject? How did it reject? So now we know that. If you want to, you can even mark out that little consolidation, because it doesn't look like consolidation now. But if I go to a, let's say 1 minute, just to show you, That's all this. So you had expansion, consolidation, and expansion down, and then look from here. You could redefine this consolidation. You could say it's even here, and call it a day. Because all you're doing is just redefining it. So there, so there. If you want to be super precise, and then see how you broke out of it, came back up into it, broke out of it, came back above it, bounced off of it, pushed up, and then we got that push right back down. So now if I go current price, we're not even there yet. If you do have a sell model here, oh, my bad. So that was what, how many points away? 10 points away. So yeah. Wait. What? Let's see. Okay, take this out. That's 1 minute stuff. See how this 1 hour closes. So we have this floor right here. Yeah, so we got that floor here. See how price can push up that floor. We see that consolidation up there that price can probably go to, or potentially go to, because we're still in this expansion, but it's kind of closing in 2 minutes. So see how this kind of reacts to the close. There's that push up. So now you just simply ask yourself, is price going to continue up, or is price going to come down and close in this gap? And you see what this gap is here? Look how it is here on the 5 minute. So it's a swing high. So this hour is 9 o'clock, so 9 to 10. 9 o'clock exactly, 9 to 10 here. So price can come back and then basically hit this high and then continue up. If it wants to close in that imbalance and then continue up. So what happens is you will see an inversion and then you see it push down and then you get no confirmation and then you see it come here and then it pushes right back up. You're like, man, what happened? It was just closing in this gap. Or you could have a gap happen between here and here. So all this will be part of the gap. All this price action here. But you don't want to chase it. That's the thing. You don't want to chase it. We've seen this earlier. We were talking about it earlier. Because we had this opportunity down here. We seen that sell, that 3 minute sell, and 3 minute sell and 15 minute sell, and didn't play out because we had expansion and how the 4 hour looked. And then we seen this buy model, but look how much risk it was. 45 points. Right now, you're at 95. So that's 1 or 2. So if bullish, we want to put PD array from previous swing low to next swing high. Previous swing low. So swing high, wait for discount to touch and see how it reacts on 3-5 minute chart. I'm trying to see how you phrase it, word it. Let me see if I can. Hold on, let me see if I can do this real fast. See if you can let you unmute now. It should. Back out and come back in. Hey, wait, did it work? Yeah, it say you can now, so I don't know why. Oh, here we go. Now I can hear you. All right, now what you saying, Thomas? Nice expansion up. I can see you unmuted now, so you should be able to talk. Oh yeah, we got some all-time highs for sure. Yeah, 50 points. Is that Adrian in here? What's up, Adrian? Yep, I can hear you. Oh. Okay. Yeah, looking at this big push up. That thing running too. That buy was too much risk though. 50 points? No way. Yep, that buy model that we had on the push down, that buy model was risking 50 points. So even targeting the high, the previous high we just had, that's only 1 or 2, which is cool. That's wrong with 1 or 2 at all. But also having this consolidation here, it would have been far-fetched because you would have to wait for it to break this first, then continue. Yes and no. It wouldn't be greedy because you had an idea where it could possibly go. It's just the fact that we did take out all-time highs and then price could have just spiked down from there. So like even this morning we were seeing a sell model that was potentially showing up on 3 and 15 minute, and then price continued, but price was basically doing the same thing the 4-hour did, where it just broke above the confirmation and just consolidated. So after it did that, and then we had that expansion up, then you see that buy model sitting there, price bounced off of it, and then it gave us this push right now, but it's only going for 100 points, and that risk is 50. So it's just like if it would have went the other way, and you're risking 50 points, that's a big risk. For me, it would have been. Yep. Yeah, that's too much risk for me. Not on a trade like this, because it could have very much just went to the downside. Yeah, because of that consolidation. Bro, it's so funny because I see Thomas trying to unmute and mute. His mic not working or something. Yeah. So I don't know what's going on with here. All I see is mute, unmute, mute, unmute, mute, unmute. Let's see. Yeah, like this push up right now, you just gotta fade out. Let's see. Yeah. This will be a walk away and come back later for me for sure. Because now you want to just see it fade off. If it does. And if it continues, it continues. Yep. So you wait for that continuation, wait for consolidation. That's all you wait for now. And once you start to get that, start to see if the model appears, does it look clean? Does it look suitable? And look at the risk. Because now, if you see a sell opportunity, oh, there you go. If you see a sell opportunity, it's gonna be now I can hear you. Yep. But yeah, once you see that consolidation, just wait for the model to appear, and then from there, that'll be opportunity if it shows up because it's bullish right now. Yep. What's up, Thomas? What was it? Uh huh. Okay. Got you. Okay. Let's see. Yeah. So, you seen this morning? You seen this morning? Mm-hmm. Mm-hmm. Oh, this one here. Mm. Mm-hmm. Yeah. 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 That's how basically I was showing them that. I was showing them that we had a 15-minute sell model and we had a 3-minute sell model. And then it was following the 4 hour. So I was showing like them this morning how we had both of those, but look at how the 4 hour sell model was transpiring because it basically went this confirmation right here. We go forward fast. So boom. This was the 4 hour at that moment. So you had price was here. So it was above the confirmation, but it was still inside of the initial stop loss. So seeing how we still had room for price to go up, but at the same time, it was inside of a sell model. So I was showing them how we had a 3 and a 15, and it was corresponding to what the 4 hour was saying, but the 4 hour was also saying that it didn't touch the confirmation and go down. It went above it. So now it's like, okay, what is the market trying to tell you? So you're using all that to get a confluence. So when I'm looking at a model, I'm not always looking at the model as the model playing out. I'm actually looking forward to fail as well because that helps me with my bias. Because okay, here's the model. If the model fails, it's telling me it's bullish. But if it continues down and respects it, now it's bearish. So now you got both ways of looking at the market. So that's what we did this morning. That one got hit, and once it got hit, went straight to a 5 minute, and then seen that 5 minute you're talking about, where it just went down, went up to it, and then pushed up. But it was the risk was so much. It was 50 points. And then, like you said, at the time, oh, I typed in 50. At that time, 50 points, no way. I would risk on 50 points. That's all. Because right now, I'm at 3 contracts. So, nah. I could have risked 1, but still, 50 points, no, that's all. No, that's all. Yeah. So right now, it's pretty much just a waiting game. Because let me turn this off now. Mm-hmm. Yeah. Yep. So now we got that expansion. Now you wait for that consolidation. So look, even if we go back to where I was showing you earlier with that 1 minute consolidation, where is that at? Well, we got 5 minutes. I actually go 3 minutes. So that was pretty much here. And if I go there, see how we bounce off of it twice, bounce, pull down into 5 minute, busy push up. So this is a rejection area, so you're expecting rejection, but you expect rejection, and then it comes to something that's telling it that it doesn't want to reject. Boom, that's the continuation back up. So then you go to 1 minute, look at that same thing, and it's telling you the same story. So price push up, bounce off of it, but look right here. This is what people get thrown off at, because they go here and they say, "Oh, here's a sell model." Here, and then this tiny one right there. You see that, and then you say, "Oh, this is a sell model. It should drop to the downside." And then price taps it and this goes right above it. But see, now when it breaks this is the initial stop loss for that 1 minute. You're bullish right there. 1 second. So yeah, right when it breaks that, it's confirming that it doesn't want to go down. But now look at it, it's going above this consolidation. So it's also confirming that you're bullish at the same time. So that model failing is also a confluence. It's just with this, you wouldn't know where to put your risk. Shoot, actually, go ahead. Retrace, no. Consolidation, yes. So a retrace would be too much, because I would need a decent amount of points for the retrace. I'll wait for more edges of it to consolidate. That way, I'm giving myself a nice time period to wait. So instead of me waiting, it can retrace right now, then the very next candle can then push down real hard. Boom, that's a retrace. But then it's like, when do you take it? So I'd rather wait for the consolidation to where an area in which I can see okay, price either gonna go above here or below here. Wait for that, and then take an opportunity based off of that. So I would just wait. Right as of right now, I wouldn't be looking for anything, even if it pulled back super hard right now, because I would want more of consolidation. I would say 3. I would go between 3 and 1. Only reason I would look for that is because we're in expansion right now. It's already just started. Now, so if I'm trying to be extremely patient, I wait for on the 15 minute. So now I gotta wait at least an hour plus for consolidation. But if I wait on the 3 minute to the 1 minute, I give myself at least I'll say 15-minute window, 30-minute window. If I get consolidation, this can be the start of it right now. If I go 3 minute, right here. Yep. Because the model could be present there. Because what happens is, let me see if I can draw that real fast while I'm doing that. So what happens is you have this here. You have that here, and then if you have imbalance here, and then price comes into it like that and then pushes out, whatever this low is to the high that it made, that'll be my dealing range. So let's say if it was this candle was this tall and it was like that, and then it came back down, like that, and then it started going back up. Well, my dealing range at that moment of time will be from there to here. And then it'd be like this. And if it really wanted to go back up, I'll look for it to do boom, 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 and then boom. Because I'm playing inside of the range that's creating between this high and then this swing low that went inside of imbalance. So usually you'll be waiting for the whole price leg low, but in this situation, I'll look for the consolidation, look for a floor or ceiling that it went to, and then broke out of, and then from there develop a range and see what's transpiring inside of that range. Even if I'm not taking nothing out, I just want to see where I'm at, and then that give me my opportunities. So like right now, let's say if this was a bigger, you want it to be a little bit bigger, but let's say this was a bigger range, like this high is a little bit higher, and then you had this swing low right now, and the next candle broke out of it. If the next candle broke out of it, and then it started pushing up, then from there to there will be my range. And then I would just want to see price go into a premium, back into a discount, and then continue up if it wants to continue. Just like here, you go that high to, well, that's what time? 5 minutes. So, well, you can't do it on this one. Trying to find an example because it's making an example right now. Actually, you could say this one. So you had this imbalance here. It became an inversion, but this swing low is the one that went into this imbalance at first, because it's an imbalance until it goes below it, then it becomes an inversion. So from there, if I'm only solely focused on this area and not the whole thing per se, then I will focus from that high to this low there, and this will be the range that I'll focus on until price pushes out, and then you have to go to a lower time frame to get in sync with what everything is going on, but this will be the range here. And then you just want to see price come back up and then come back down and then continue up. Now, this one didn't come back down into a discount. It went into a discount, pushed up, never came back into it. But if it came into a discount and pushed up, then you can continue. But remember, I was also showing you how to look at it from that those quarter points. So you got it to where you look at upper quadrant, lower quadrant. Even though it never came back down to discount, it stayed in the upper quadrant here, and then continued for continuation. But that is more or less, that takes a lot of practice, knowing when to look for if it's expansion. So what I mean by that is whenever I have a dealing range and I have the upper quadrant and lower quadrant, if I'm expecting expansion, I'm not even expecting it to come down into a discount to continue, then that means that price comes into the upper quadrant. It's like, say in this example, this is pretty much like consolidation that you can see right here. Price comes into it, and then it plays around inside this upper quadrant and then continues. But that's in the form of an expansion. But that's the advanced way of looking at it. But to keep it just simple, you go premium discount. And if it don't come to a discount, you don't take it. So it's all about how you look at it. And like, see right here, it's 1 minute. Push up, back, forth, back, forth. So you can say this is consolidation right here if you wanted to. Right there. Price consolidated, broke out of it, came back below it, touched it, now you're dropping to the downside. And you can use it as consolidation. But for me, I don't want to go straight to 1 minute final consolidation. I'd rather go like a little bit higher than that, like a 3 minute, so I can get a little bit more weight on my consolidation. So take that. Let's go 3 minute. So like, even you can look at it like this. Like that. There. And then you go to 1 minute and look at that same consolidation, but looking at it from a 3 minute perspective. So it's pretty much the same thing. But now you have this push up, and then if you were looking at it from a micro scale or microscopic lens, and you're trying to take a quick trade, then you have this swing high here, that swing high, took out that, and then from there you have here. Here, this one. But then you also have one above it too. Mm-hmm. Yep. And then this is like 9 points, and then you see if it puts to the downside. And the fact that this is only up for 3 minutes, price can very much just blow through that. But that's the price you pay for the risk, and that's the main thing. Let's see. Yeah, and it already took out this low here, so it can very much go for that high, then go to the downside. But it's all based on what price wants to do, because we're already in expansion to the upside. So this would be counter trend trading, because you're going against the trend, which is bullish right now. But remember, sales are very, very aggressive. So if you have that mindset on the sell and you catch the aggressiveness to the downside, it could be a retracement, but it could be a nice retracement. So that's why whenever I look at sales and it's counter trend trading, I look at the risk. The risk is the main thing. If it's cool risk, then why not? If it don't play out, don't play out. What that mean? Okay. But yeah, that's pretty much waiting on that. And then if this blows through that, guess that's telling you price is still bullish. So see how that, even though this is a sell model and it's playing out, it already took out a low. So that's already telling you one thing, that it's trying to potentially go for the high. And if it fails to go for the high, then it's gonna push down. But if it goes for the high and takes it out, then it could be showing you that it's bullish, still bullish. So it's working for you both ways. Mm-hmm. No. Oh yeah, you asking? Yeah. That's crazy. Heck no. Yeah, but that's what you want to do, because it also teaches you how to sit on your hands. That's the main thing, is just sitting on your hands and wait for the right opportunities. And there's no need to do it. Like, you know what I'm saying? Like, for what? Like, what is it gonna do extra for you? Like, are you just exposing yourself to more risk? That's all. That's all I was showing. Uh, that's all I was showing. Marcel yesterday. Basically, how like you take a 1 to 3 or 1 to 2, and then you like, oh, it's only a 1 to 2, 1 to 3. But as soon as you move your wrist, that 1 to 2 changes. So I'll show him how you can have a 1 to 2 or 1 to 3, and then the trade goes in profit. If your stop loss is only 15 points and you were targeting 30, okay, it's a 1 to 2. But if you move your stop loss and the profit were like to 5 points once you're in profit, now that goes to like a 1 to 5. It changes because it's all about the initial risk. After that, then it's risk management. Like right here, this is 1 minute, but just broke this imbalance right here. This floor. But this is all consolidation. So it's just navigating consolidation. And this would drive you crazy, because you'll be like this. You'll be all zoomed in. Everything look all like big moves and there ain't nothing. And you're getting chopped up for no reason. So even something simple as this inbounds right here, this floor, seeing price stay below it. But yeah, I'm about to hit the road and head out of here. I say watch it. If it starts doing a consolidation, take advantage of it after the fact. But until then, just wait. Ain't no reason, especially Thomas. Don't take nothing. If you had a good day, don't take nothing. Leave it alone, man. Leave it alone. Just compound. Just think about compounding. That's all you need to think about. And there's no reason to rush anything because you only one big trade away from going, having a big increase. So just penny pinch, take opportunity that you can, and then once you get a good one, you take it, boom, you get it, and you just add on to it. You keep compounding. That's how you gonna get there. Yep. And we getting that little push down. So all right, my guys, I'll talk to y'all tomorrow. Yep.